The Australian dollar rebounded strongly today on better than expected retail sales, and buying continues after the Reserve Bank of Australia's rate decision. Sales rose 0.9% month-on-month in January, compared to expectations of 0.4% month-on-month. The Reserve Bank of Australia left rates unchanged at 3% as widely expected. In the accompanying statement, Governor Stevens noted that inflation will be consistent with target and growth a little below trend over the coming year, and the current accommodative monetary policy stance is appropriate. He said that there are signs that prior rate cuts are having some of the expected effects, but exchange rates remain higher than expected. Nonetheless, Stevens also noted that with the current inflation outlook, there is scope for further policy easing if necessary. Australian dollar US dollar is back below the 1.02 level after a dip to 1.0115 yesterday and breached the 1.0148 support briefly, while the downside momentum remains unconvincing with the 1.0289 resistance intact. A further decline is still expected in the pair. European Union Economic and Monetary Affairs Commissioner Rehn said that Ireland and Portugal could be given more time to repay the bailout loans to ease their exit from the bailout programme and return to market. Rehn noted that Troika will continue to examine an appropriate and incredible extension of the maturities on the early European Financial Stability Facility and Mechanism loans, with a view to smoothing the path back to durable market access. The Dutch finance minister hailed that both countries' programmes are on track and performing well in spite of the challenging macroeconomic situation. Meanwhile, Rehn also said that the situation in the Eurozone may also justify, in a certain number of cases, reviewing deadlines for the correction of excessive deficits. A major German newspaper reported that some European Central Bank members were worried about the central bank's participation in the Eurozone rescue efforts, as this might create a conflict of interest and compromise its independence. The newspaper cited that the level of discomfort has reached such a level that there are considerations among some important members of the ECB to leave the Troika entirely. Yet ECB board member Asmussen commented that the ECB would not leave the Troika and stressed that the members don't see any threat to our independence while we are participating in the Troika. Asmussen stated that the ECB participation in the Troika is key as they have great knowledge about Europe, its institutions, its economy, and they especially provide expertise on macroeconomic and financial sector issues. He reiterated, "We will not withdraw from the Troika." In the US, the Dow Jones was supported by expectations of a continuation of policy easing from the Fed and closed at a 5-year high. Fed Vice Chairman Yellen warned yesterday that insufficiently forceful action to achieve our dual mandate also entails costs and risks, and she saw the balance of risks, calling for highly accommodative monetary policy to support a stronger recovery and more rapid growth in employment, and ending asset purchases before observing a substantial improvement in the labour market must also